Setting up an offshore company sounds simple enough. You find a jurisdiction with low taxes, strong privacy, and good asset protection, right? But here's the harsh reality most people learn too late. The very place you choose to incorporate can destroy your entire offshore plan before it even begins. A company without access to banking is useless, and too many jurisdictions are instant deal breakers for compliance departments and banks worldwide. I've seen countless people spend money on structures that fall apart at the banking stage. Countries end up on what you might call banking blacklists for three key reasons. The first is official blacklisting from organizations such as the FATF, the European Union, or OFAC. These bodies flag jurisdictions that fail to meet international standards on transparency and anti-money laundering. Once on those lists, banks automatically reject company applications from those countries. But it doesn't stop there. Banks also maintain their own internal blacklists. Even if a country cleans up its act, a poor reputation lingers, and compliance departments simply don't want the extra risk. The second reason is obscurity. If bankers have never heard of the place where your company is registered, they're unlikely to take time to research it. They default to no. Finally, reputation matters tremendously. Once a jurisdiction becomes associated with tax scandals, financial crime, or hidden ownership, it can take decades to rebuild credibility. Let's look at some of the worst offenders that will almost certainly block your access to reliable banking. Seychelles once became famous as the cheap offshore destination that promised privacy and minimal reporting. Today, that same secrecy has backfired. Banks associate Seychelles companies with high risk. The European Union has repeatedly questioned its compliance standards, and this constant back and forth with regulators has made banks wary. Even though a Seychelles company is legal, most banks see nothing but compliance headaches and potential sanctions risk, so they say no outright. Panama is another cautionary tale. It offers real benefits if you live there or have a physical operation, but for non-residents using it purely as an offshore company base, banking access is extremely limited. The Panama Papers scandal damaged its reputation globally. Since then, both local and international banks became cautious about Panama entities without substance. Unless you have real staff, an office, and operational presence, your chances of opening a normal account are slim. Anguilla's problem is a lack of transparency. Despite being in the Caribbean near recognized centers like the British Virgin Islands, Anguilla failed to keep up with global reporting standards. The EU considers it non-cooperative for tax purposes, and its minimal record-keeping leaves banks uncomfortable. When a bank can't see accounting records or ownership details, they reject the applicant automatically. Liberia is another classic red flag. Though it maintains legitimacy in maritime registration, for general offshore structuring, it's problematic. Outdated regulations, minimal compliance, and association with sanctions are the perfect storm for rejection. Banks know Liberia's reputation and generally won't even process the application. It's seen as a jurisdiction of last resort, not a serious business environment. Belize once attracted entrepreneurs with its privacy laws, tax exemptions, and low cost. But those same privacy features clash directly with modern banking requirements for transparency and full disclosure. Belize has made reforms, but its reputation for shell companies and secrecy persists. To most banks, a Belize structure still signals trouble, so they avoid it altogether. The good news is there are better alternatives that balance benefits with credibility. Established jurisdictions like the British Virgin Islands remain accepted worldwide because banks understand them. There's a long record of compliance and stability there. In Asia, Singapore and Hong Kong stand out for strong regulations and robust financial systems. In the United States, Delaware and Wyoming provide accessible yet respected options, particularly when structured properly. Within the European Union, Cyprus and Malta combine tax efficiency with full recognition by European financial institutions. Successful offshore planning is about more than registering in the right place. Your actual business activities, customer base, and documentation all influence whether you'll succeed with banking. Many people make the mistake of setting up a company first and worrying about banking later. By then, it's often too late. The smarter approach is to research banking access from the start and work with professionals who already know which combinations of jurisdictions and banks fit your goals and risk profile. Offshore structuring still offers powerful benefits when done correctly. You can optimize taxes, protect assets, and maintain privacy. But those goals only matter if your structure actually functions in the real financial system. Avoid jurisdictions that banks mistrust. Spend a little more on a respectable setup that works flawlessly. The small extra investment pays off quickly when your accounts open smoothly and your wealth remains secure. If you want to reduce your taxes to single digits, make your assets impossible for anyone to touch, and gain more freedom with second citizenships, get in touch with Liberty Mundo and book a consultation call. We will help you develop a complete blueprint to organize your life to safeguard your wealth and your freedom. Follow the link in the description for more details. Alternatively, go to taxfreecompanies.com to set up an offshore company or trust quickly and efficiently. Thanks for watching, and see you in the next one.